Let me have them.
Okay, so it's SI.
Kill the music. Kill the music.
Doing
Go
that.
ahead.
SI.
Uh-huh.
UPST.
SIUPST?
No, that's two
Oh,
separate
SI.
ones.
Okay.
Yeah.
Okay. UPST?
Yes.
Okay. No,
Then
UP.
his
Oh, my bad. Hold on.
like UPS, like the
Right.
trucks, and then T. Yes. T is in Tom.
Let's see. Okay.
And then Gush, G as in Garrett, U as in umbrella, S as in Sam, H as in Harry.
Okay.
And then J Nug, J as in Jared or Jumper
I
Jacks.
got it.
Okay. And
J-
NUG,
okay.
and then ARKK,
Oh, okay.
It's arcade.
AR, and then two Ks.
Yeah, I got that.
Oh, SPCE.
SPCE.
Yes.
Space? Yeah, it's a space.
Yeah. A
Mhm.
couple of them are EFTs, but I mean ETS. But then yeah, that's it.
That's it?
Okay.
Yeah.
All right. What do you want to know?
You can see my radar screen on. I'm just checking. I can see my what you call it, right?
Yeah.
All right.
Click on ARC.
So these are just some that I happen to come across. And I wanted to know how to read the charts better. And then to also like see which ones out of those were like, I guess the most worthy pick or most worthy choice.
Right.
Hold on, I'm just cleaning it up a little bit so I can. All right, we going with ARC, right?
Yeah, we're going with ARC first.
There's Kathy Woods, right? There's Kathy Woodstock there.
That is correct.
Okay. This is one of the what you call it off of it though. What's going on with ARC? All right.
Is this like one of those warrant versions of it?
Yeah,
No,
I think
that's,
so.
ETF. That's the
ETF, but then
for
that's not the what you
fund.
call it. Let me see something. No, there was another version of it because that's not the version that I was looking at before. This is the ARC K, and I think there's another one. Let me take a look and check on my phone real quick. There's another ARC.
Right, it is. But this is the ETF for the entire fund.
Or ARC K. There's an ARC W. Well, I was looking into the ARC W. That's what it was, and the ARC G was the geonomics. Okay, I'm sorry.
All right, let's get to it.
Let's
Keep it timely.
Let's see what's going on with this chart here. I mean, it was gradually going up since last April. So in a whole year span, it kind of went up nicely. But then it did what I mostly talk about when I say like most of these stocks in the process of their growth, when they start to go up, they usually magnet back down to either the 20 moving average or the 200 moving average. This looked like it actually just got overinflated and just came back down to reality.
Okay.
Which reality is back down to this 200 moving average. It's
Which
trying to
good.
climb out of,
Which is really good. I like this position.
Right. This is actually a pretty good buy position because right here was too high. So when you see this riding up here and the 200 is lagging behind so far, if you buy it here, anywhere up here, you know you're going to end up losing somehow. So some people would have been lucky here in December and said it's good, but it came right back down. So right now, I would say it's in a decent buying position. The 20 crossed over the 50. And now eventually what's going to happen with this climb, this 20 is going to cross back over the 50. The 50 is on top now. This is the 50 moving average. For all those who know, this is the 20 moving average, and this is the 200 moving average. So this 20 is going to eventually cross back this 50 with ARC on the rise. So as you see right there, it already hit support. Right there's the support level. At 107, it caught support, and now it's back on the rise, which is at, I think it's at 120 now, if I'm not mistaken. 121, it's at 121 now. So it's gonna start back rising now. And hopefully by say June, July, this should be back over 150, if that far.
Okay, all right. When you think of an ETF, anytime you type in a ticker that's related to an ETF, what you want to do is think about an ETF is basically a holding company, a holding security that holds several different stocks. And when you think about holdings, when you say ETF, you think about holdings. And that ETF, how many, you want to ask yourself how many holdings and what type of holdings this ETF is holding. What companies are in this particular ETF in terms of ARK, because right now you see ARK got this nice daily trend since $40, $50, and it's been pushing since last year. And now we get this nice push up to 150. And just recently we had a lot of technology selling off. So that looks like ARK investment is in a lot of tech stocks, and they've been selling off as well. Okay, we're coming back to the 200 where there's support, but what holdings is in this ETF? So the top 10 holdings is Tesla, Square, Teladoc Health, Roku, Zillow, Baidu, Zoom, Spotify, CRISPR. Those are the top 10. So these are the companies that Cathie Woods in this ETF is investing in. And you can either isolate these individual stocks and invest into them, or you can invest into her particular ETF, which has a conglomerate of these investments. So you're putting your money in one basket, but that one basket has many baskets, if that makes any sense. So that's what ETFs do. And they're in particular sweet spots. So Cathie Woods has a great track record for performance and has been doing really well. It's in a buy zone. I like ARK for a long term. It's got some great technology in it. Tesla, Square, Teladoc, Roku, Zillow, Baidu, Zoom, Shopify, CRISPR. Some of these, they already made huge moves, especially Zoom, Shopify, Tesla. They made some outstanding moves. Roku, crazy moves they already made. And I think CRISPR, a couple of other things is looking to, Zillow is looking to make some great moves as well, Teladoc. So I think the fund is going to continue to, perform. And this ETF is particularly a good ETF that I think over long term, if you just pick up a couple of shares here and there long term, and in probably 10, 20 years, you'll probably have your down payment money for your house or your car, whatever, things like that, because this stock tends to look like it's going to make some money because it's picking niche technologies that's going to be around for quite a while, because this is what we're doing now. We're doing electric, we're doing fintech with Square. Teladoc is all mobile data, kind of like your health records, but on a mobile phone. It's transferable, so it's like in a blockchain. They're going after that. Roku, subscription service, cloud data subscription for music, Zoom communications. We already know that's the way how we're communicating now. So it's a staple item. It's becoming a staple item. CRISPR, genomics is going to be, therapeutics is going to be where they're going to be doing gene editing. We're already getting our first dose of gene editing with these vaccines. These mRNAs are actually gene editing vaccines. They're not really vaccines, they're gene editing devices. So we're getting that. The technology has already been introduced to us, and here we are. So those are the top 10, but take time, Eleonora, to look into ARK investment ETF. This ARK investment ETF, it has several different holding several companies in its balance sheet. And you can also research those individual companies. And if you like those companies, if you like what Cathie Wood is choosing, then you could just choose this one ETF and say, all right, I don't got to do no hard thinking. I'm just going to buy this, and I'm looking for this the next 10 years to see it double, triple, quadruple, whatever. But and I like it at the 200. It bounced, as you can see, just 3 days ago. The market was dipping off, and right there at 110, it caught support. It bounced the next day, and then it came right back down from 130, from 110, which is a good price movement. $20 is a good price movement in 2 weeks. It came right back down to 110 again, and it bounced again last week at Wednesday. Probably, what was that, Tuesday, Wednesday? No, Was there Tuesday,
Tuesday.
Thursday? So that gapping up to the 20 looks good to me. I would pick up shares of this or options and shoot it out as long as I can and not bother it. If you're looking to day trade it or make some money from it, I think it's good to pick up a few. And maybe if you got plans to pick up some, pick up some. If it dips lower, pick up some more. And then if it goes higher, I would probably look to hold and see if, depending on where we're going with technology, these things pop another year or two. As long as infrastructure and everything is supporting it, and the market supporting it, I would look to keep going. But if it breaks that 100 mark, I think we're looking at a bearish scenario. I would cover the trade and wait for it to move lower, and maybe into the 90s or 80s, and then I would look to pick up some there, and then pick up more if it breaks even lower, which I don't foresee. But you know, you got to have a plan going up, and you got to have a plan going down. I do suggest you do that. Like, all right, if I get this here, how long am I going to hold this if it goes against me? And I got a plan in case it goes down. That way you can stop your losses. My rule is 10%. Anytime I see a stock moves against me more than 10% from my original position, I'm looking to think about, do I want to cut this? Do I want to cut half? Do I want to get out of this? Let me check the news. The news could be something where, you know, some CEO did some crazy stuff, or they got caught with fraud. And, you know, you got to pay attention to the news in your investments, because things change and the market changes, and you gotta, it could be a higher competitor that take most of their market share, and they no longer are generating capital or income, or they no longer have the market share, and they're losing value, and everybody's running to the new stock that's getting value. So that's how you want to look at it. Anybody got anything to add to that?
Yeah, what happens is, right, with ARK, right? Okay, a lot of people are just saying invest in ARK. Now, you came up, you know, and said ARK, the ARK K, which Dwayne was like, isn't that a warrant? What happens is you have about 8 different ARKs. So there's an the ARK, let's see, the ARK K is for innovation, but the ARK W is for the next generation internet. Then you have the ARK G, which is geonomics. You have the ARK F, you have the ARK Q, which is autonomous vehicles. That'll be the one that's actually holding Tesla. So the ARK G would be holding geonomic stocks. And then you also have an Israel ARK, you have an ARK O, and you have an ARK R. So you have about 8 different ARKs to choose from depending on what you want. So somebody just say invest in ARK, that just broke you down to an area, but they still have 8, 9, 10 different ETFs, and you still have to go into which ARK, because you said ARK K, but there is a bunch of other ARKs. So you can pick ARK K, and then you want to invest in like Tesla and stuff. If you pick ARK K, that's the wrong ARK. So you still have to define which ARK you want. Like you just picked ARK K, which that's where you was at. But then they also have, let's look at ARK, which one was the autonomous, the ARK Q. We got a different price, but a similar movement, but it's a different price, and they invested in other things. So you still have to break down which ARK you want to get into and for what reason. Because this is similar, but this didn't break down as far back to the 200 moving average, but it's still in a buy zone bouncing off of, you know, same thing here. It caught support down here, but it's a different price, different ARK. And if we continue to type ARKs, we can be all day typing ARKs. ARK KR, different ARK, different movement. So the name ARK, you still have to get, this is ARK Restaurants, by the way. So this ETF is full of restaurants, and as you know, restaurants took a hit with the COVID and everything. So this is up here. I don't know what it's going to, it's still in a buy zone. All of them is really in a buy zone. Most of the stocks right now is in a buy zone because of that dip, and everybody's trying to retreat and get back. So a lot of them is in the buy zone. So ARK is it's a pretty big, you know, it's a big spectrum when you just say ARK. So you have to still know which part of ARK you want to get into and which part of ARK you're interested in. So that's all I have to say on that.
Does that answer your question, Eleanor, for ARK?
Yes, it does.
I'm gonna go, let's move on to the next.
Yes.
You
What was
choose
the
the
next?
next one.
SI. Let's see what's going
SI,
on with
let's
SI.
go.
Let's
SI, look
go.
at that recent big move on the daily.
Coming
Since
to it.
November, that's been gaining momentum, serious momentum.
Okay, so
Low float,
bank.
Silvergate Capital. What do these people do?
It's a bank.
Regional banks, financial.
Regional banking.
It's in California. We want to know what they're holding. They increase revenues and loans. So they're actually probably doing provisional loans. Income after loans and closures, net interest margins increase 14% to 3%, which is extremely good. They're doing quite well. They got a buy rating, raise the price target to 150. It's at 143. Out Silvergate research of Bitcoin collateralized US dollar loans announces Fidelity Digital Asset as custody provider. So they're adding crypto into the space so they can use it for transactional aspects for financing and probably mortgaging, which is interesting. So ARK is on the move. They're smart, they're thinking, they're doing their thing. And we had a strong breakout since last year, November, and it's been just cooking. And right now it's a little divergence consolidation from the 180, from the 100 zone, 120, bouncing off 120, 150, 140. So it's pretty up there. Looks like it's no volume yet. People are taking their profits. A little bit up here.
Hold on this.
What do you think, Juice?
It's a little pricey. You can't trust
Read the
banks.
chart. Just read the
Yeah.
chart.
Okay. I mean, it dipped down, it sold off here a little bit. It's a little over, but then, you know, my buy zone, like once something is in between that 20 and that 50 moving average, and it's gonna sound like I'm saying the same thing over and over. Once it's into this zone here, when it's between that 20 and 50 average, that is your cue to buy on most of your stocks. This is just part of, you know, a simple read. Once it gets into this zone here and the stock starts to turn green. So I would literally wait for tomorrow. And if this starts to show green, like it wants to break over this 148, I would get into it. If it turns red, I would just try to let it, you know, bottom out a little bit, go down to 130 if it does. What was the today's price? I'm sorry. It closed at 143. Yeah, I would, you know, if it comes back down a little bit, but then if it starts out the day red, I would just wait until it comes back down to about 130 and try to pick it up. Because again, it's probably gonna hang around this 20 moving average right here.
Can you give me a
So
monthly
like how you
chart?
said,
Huh?
Go ahead. Sorry. answer the
sorry.
question.
So like how you say, it has to come between the 20 and the 50. Does it matter which one is on top, whether the 20 is on top or the 50 is on top?
Well, it's preferably the 20 on top.
So if the 50 is on the top and it comes down, don't buy it then.
Well, you can, because it's most likely the 20 is gonna. I mean, if it comes down when it starts to rise again, the 20 is probably gonna, because it's a moving average. The 20 moving average is gonna the 20 moving average is gonna move up faster than the 50 will.
Okay.
Because
okay.
that's an average of a shorter span.
20 days, right? Okay.
Right. So the 20 will start to move up faster, but when it's in that zone, it's a buy zone. Because now it's back into, it's like going back to home base. So 200 is the real home base. But then like in a stock like this, it's going to take the 200 way longer to catch up back. But like, you know, most stocks, they can shoot back to the 20 if they feel like it, because that's the average. But once it gets in between the 20 and the 50, that's buy zone 1. If it comes down between the 50 and the 20, that's buy zone number 2. But you still try to wait for a green day off of it. Once you get that green day, because we're doing long term, this is we're talking about is more of not a long term months and years. We're talking about even a swing trade or a couple of days swing trade. You know, but once it gets into that this is the secondary buy zone, which would be between the 50. I'm pointing to the screen, y'all can't see. I'm sorry, but once it gets in between this, if it gets between the 50 and the 20, you wait for like a green day. You know, and you could wait for 2 green days for it to start to pop back up, and then you get into it there, because then now you're showing that we're going up, and we're going up pretty strong, bouncing off of the 200 if it goes that low. But the 50 and the 20 is usually, because most times when you see a stock goes like this and it gets all this power and go up, it ends up failing because it left off of the 20. You see how down here it's like closer to the 20 and it rides the 20 coming up, rides the 20 coming up. And then once it explodes off the 20, it tends to shoot back down too low behind it. This again, it explodes really strong off the 20 here. And look what it did. It sucks it back below the 20 again into the this would have been a nice buy zone, or these are in the buy zone. Now it exploded again off the 50 coming up, went up too strong. It dropped back below the 50 here. You understand? So now it's on an uptick again. It's kind of back on an
Okay.
uptick now. So now, before you enter this now, you would want to wait to see, well, because it kind of is moving down, but you want to see what the next move here is. If it's going to come back down between the 50 or below the 50, because the support is down here.
Mhm.
So if is it going to come back down towards the support, or is it going to continue traveling up? So if the day turns green, it starts to pump up, but this has a lot of, you see all these wicks here? That means it's struggling up here. For some reason, it's still struggling up here. But if it breaks over this, then it's probably going to keep going.
Okay.
So it needs volume also. It doesn't have much volume.
Can you
Okay.
put that chart on a monthly real quick, right there on that same screen? Just change that to a monthly. Let me see what it looks like. Change that time frame to a monthly. Okay, so there it is. So you got some tall body wicks and have resistance against the 80 and the 60. It's forming a flag for a lower move right now on the monthly. And that's this new month, which it just started from last month. And we might make another move back down to the 100. Because right now that previous month is indecision. It's just got in the middle, either it's going to continue higher or it's going to diverge and make the move back down to the 100. So let's go back to the daily. So you got 2 months with those tall body wicks. So here, those are those 2 months, February and last month, March. So now we're coming into April. We're trying to go green, but we see a little bearish signal here, even though they got a price target at 150. So they're innovating. They got a strong balance sheet. They're doing smart investments and loans. I like them. I like them long, but also I don't like the price where it's at. And between the innovation and what the Fed is doing, this could possibly be a situation where you might want to wait on this one and see if it makes that move over to 60, then it's hot. And you want to watch it every day. And then but also if it makes a move lower, like Juice said, I would pick it up about 100, about 20. I would pick some up. I would pick some up about 100. But if it looks to make a move lower than that, I would run, because then it's going to try to run and retrace back down to the 200. And by then, it's a dead trade. You want to cover and wait until it gets super low. And as long as the company's still strong and they're making smart moves, I would pick it up down there and then see if we can get another rip, which it took November, December, January, February, March, about 5-6 months for it to make this move, which was from $20, $30 all the way up to 180, which is a huge move in a short amount of time for an investment. So I think it's got more potential. You just got to read into the company and what they're doing and what sectors they're in the space and why would the value move so fast. Why is it so aggressive? And just research the news, research what they're doing, and try to see, if they're running a good company and they're profitable. And if they are, and you like them, just buy some, pick it up, pick up an option maybe for 2 years, pick up some shares, and maybe it'll skip to 300 because it is a low float. If some volume comes in here stronger, this thing can really get to cooking. 16 mil float. If a lot more people like the way this bank is navigating their profits, and a lot of more people's going to come into this thing, so it's going to be definitely a hot pick. So it's a good stock, a good ticker. Anything else? Does that add to it? Sums that one up? Or you want to move on?
That sums it up for me.
We can move on to the next one.
Okay. UPST,
Yeah.
Upstart Holdings, 56 mil float. That's what they're saying.
Customer Financial Services.
58 mil float over here in Webull. It's got some shaky movement. It's volatile. I like the range on the candles on the daily. It looks definitely frisky. What is this?
This is new, right?
See, yes, it is. Looks like a recent IPO. What do they do?
What you call it? There was I'm sorry. I
San
checked it just
Mateo, California.
Customer Financial Services.
Consumer financial industry. Okay. They're making money. Okay, we're reading into this Upstart. It's a holding company, obviously. Market capitalization is 10 mil. Shares outstanding is 73, 56 in the float. So some people is holding some shares, some insiders and investors. It's 2019 and 20. They got some quarterlies up here for financials.
Oh, them? When did this
Yeah,
company
they
start?
do.
Oh, this is older. Okay.
All right, so what do we want to know with this one? It gapped up from 40, 80, gapped down, and then it took off, went to 80, and it smoked up to 100, and then it's last few days, it smoked all the way up to 160 and change, which is phenomenal. Shook out the next day, dumped out to 120 from 160, caught a bit a little bit last week, and now it's chopping around. So this to me looks like instability. I don't know why. It definitely gapped up. So, and some volume came in because it ain't a lot of volume coming into the stock. It seems like a lot of people doesn't know about it, but for the most part, some volume did come in for a reason. If we can find out why, maybe we can give a better read on what is going on with this ticker, with this company. But it did a huge amount of volume, over 10 mil. Somebody thought it was really hot 2 weeks ago. And, oh no, but that's 20 mil. Over 20 million shares came in and started making it smoke up. And then it's over the next course of several days, it started cooking. And we had over 8 to 10 mil in volume per day. Now that volume is fading the last few days, past week. So usually when volume drops, price doesn't maintain, it actually pulls back. But this one is kind of holding up steady. So Juice, give me a read. I can't, anybody?
It's kind of new. That's why it's hard to read because it doesn't have a past, it doesn't have a history. But I think they're just pumping this shit up, really.
Yeah.
Because like it was doing fine here, and then all these people lost their bread. So I think they're just pumping this back up, just for the hype of it. Because right here, like I said, like Ali said, this made the move, and the very next day it took away the whole move, and the day after that it took away some more, pumped it up again, faked out the next day, took away the move again. Now they're gonna pump it up one more time. I mean, if you could time this, you could probably catch some money in it. Wait until this right here. I'm figuring they're probably gonna do a 2-day pump again or a 3-day pump, and then it's gonna fade back down, and they're gonna keep playing the same game again. It really does look unstable because I can't call a direction here. It's like too new. This came out in December, so it's kind of new. This is a close your eyes and pick yes or no. I think I need some more data on this to get a proper read. But from what I see, I think it's probably gonna 2 more days. The volume is gonna continue to drop out, and it's gonna fade right back down to about $60 because it valued $60 here. It opened back down here at, what was this price? $23, I think, or something like that. Let me check it. Sorry. What was down here?
Okay, I got an article with Motley
The
Fool.
low was $22 when it came out. That's what it started off at, $22. And this is what, about 4 months, 5 months, and it hit 160. I don't think it's real. I don't think it valued that much. That's a personal opinion. That's not charts, but it doesn't value that much. $100 at best, and that's a lot.
All right, in the chat, where's the chat at? Chat. All right, Eleonora, I'm gonna put in the chat the article, which you can grab, and that's Motley Fool. They're really good, pretty darn good with their write-ups, their articles, and their investment strategies and their perspective with the authors on how they write up companies. This is a lot of good information on basics. I actually, now that I'm reading it, I like this, and it's going to be more volatility ahead, but I think they got more room to grow because they use artificial intelligence to do some of their loan products. That's what I'm reading, which is pretty smart. That's the new wave. So in the chat, you got a link there for the article concerning UPST. Anything else? Next.
I think it'll go, but I think it just has to pedal back some more. and start a real climb, if you get what I mean. I don't think this is real.
Well,
I think-
read the article, and
Okay.
it's definitely good tech. It's good. This is a good pick. It's good to keep your eyes on this one. I think it got more room to rip, and depending on what they do. But it's definitely. I think it's definitely going to be some more volatility because the chart is new, and that recent move definitely is a gap up. So there's a vacuum, but the only thing is, there's not enough participants here. I don't know who's holding the stock. It definitely deserves more research. But based on what this company does and how they do it and their profitability, it deserves more attention because it could have a lot more potential to make some more moves. All right, next.
GUSH.
Okay.
It says low volume. See if you can find me a float. I don't see it on me.
Webull. I am not getting a float either.
This is coming
This is not a float. This is ETF with oil and gas bidirectional. So what you're playing is oil and gas off the S&P direction, the daily. This is the daily S&P read of the oil and gas extended period moving average. So this is a derivative of a derivative, which we don't trade here. So
it was once $19,000.
But this derivative, lately it's been moving off of the aspect that off of gas, it's been deflated. And now energy has been coming back up for some reason from the volatility of the market. So people have been going back into energy. So that's why you got this recent move from October going straight up to $90 from 20 of, I guess, oil and gas. But remember, oil got cheap because the Saudis went public and they said they had trillions of barrels on reserve. So everybody's like, yo, you got to drive the price down. And oil got super cheap. It actually went to damn near zero. And then it started coming back up. Didn't
they start paying people to take the oil at one point?
Yeah, they were paying people to take the oil off their hands. So this ETF is definitely getting some action. I would avoid this ETF though, unless we're not masters. I'm not a master of ETFs in this sector, but based on this chart, it made its move. Can you show me recently off the 200? Where's it at now?
Yeah, I'm coming. That's what I was trying to pull up now. Because it was up to 23,000 at one point.
Okay, this is totally unreadable. All right, this is consolidation to me. Even though it went from 20 up to $90, and it had a strong day Wednesday, so it's implying that the market is coming back up and people are going to be needing oil and gas. I said go long. It's definitely in a pole position to go. The last 3 days, it caught the bid, it bounced off the 50, or is that the 20? Which one is the brown one?
The brown is the 50, so it bounced off the 50.
Bounced off the 50, claiming the 20, looked like it's ready to move higher. It could break above and go above 100 in the next week. If this catches a bid and claims 80, I would look to go long maybe for a week or two and see if it can make that move up. But we need to know why this ETF is hot. So you got to study into the related ETF sector of why oil and gas would go up. Do speculators or people who look at the markets suspect the oil and gas prices to go higher? It could be due to inflation, where natural resources are going to be inflated because inflation is on our ass now. And these products like this, natural resources and energy, is going to go up because they're natural and they're commodities. So they're going to go up because we're actually dealing with inflation. They're going to cost more. So they're going to profit more. So that's definitely looking like it's going to make a move on the daily chart. That's an ascending pattern right there. It's definitely working well off the moving averages. But if it claims that 90, that 80, which it looked like it's ready to do, because Wednesday was phenomenal. It just pushed. And at the end of the week. So if it settles down and stays at 70 and between 70 and 80, I wouldn't touch it. Once it claims 80 and look like it's ready to make a move and it's a lot of volume, I would take it and see if we can make a move to the 90 or 100. And that to me is a day trade. It's not an investment. It's a day trade.
What's that line coming down from the sky?
This one here?
The one that's coming down.
This one?
Yeah, that one. Yeah.
This is the 20 moving average. That's the collapse of it, basically. It's the 20 moving average, but then that's how hard it took the dip. See, this stock is coming from over $30,000. I don't know if you was watching the screen when I was going back, but if you see how it's coming out of a $30,000 in 2017, this stock was valued at $30,000.
This ETF, this is a derivative.
Right.
A derivative ETF that operates off the S&P oil and gas ETF exchange. There's an exchange, and this is 2 times price, meaning they usually make the price more available for lower investors, but the original price will be trading a lot higher. So we got to find out the relative of this stock. Who is the relative of this thing? Because it's in correlation to a particular stock or security. Supposedly it's low risk.
Get it back here.
Oil price. See, you got to read about oil prices and energy. If it's going lower or up, that's what this stock is going to be involved with. Oil going lower, like the Suez Canal ship is now afloat, so oil falls. And when the ship got stuck, oil was going up. So this recent move could be definitely when the Suez Canal, when that report came out, it went higher. It was going lower, but then now it's coming back up because they got the ship loose, and now they're going to be able to get OPEC and the oil coming back through that Suez Canal. But if they can't get oil through fast enough, prices are going to go up because there's going to be more demand, and there's not enough production and not enough oil where it needs to go. So this stock will go up if there's not enough oil. If they got oil coming through, the stock will go down.
Was that ship freed yet completely?
Yes, completely.
Okay.
Next, anything else?
Nope.
Nope, not for that one.
Pick up the pace. JNUG, what is that? JNUG?
JNU, yeah, this is gold, it looks like.
What is this?
Gold, my friend.
This is another ETF. Direction Daily Junior Gold Miners Bull. Okay, so this is an ETF off of gold, and they were already suppressing gold. Gold was dipping. Let me look at the futures contracts. Gold.
Well, you know, the rise of Bitcoin is causing the demise of gold. In a way, because money is based off of gold, and now they're basing money off of Bitcoin. Because what happens is currency, you know, the US dollar is dying. Currency on the whole is dying. That's why Bitcoin is on the rise, because currency don't last forever. You know, right now, the US dollar is valued at about 4 cents. If you go back in time, like the US dollar was valued at $1. Like back in the early 1900s, the US dollar was valued at $1. Now the US dollar is actually valued at 4 cents. So what's going to happen with the currency? The currency of the US dollar is going to die completely out, where the US dollar is not going to have any value, period. Which them keep dumping money into every time the Feds dump money into the market, that takes down the dollar more. So the dollar is going to die. Like the euro had to be created because the money in Europe was getting weaker and weaker and weaker. So they had to come up with a new currency. So once like the euro is going to live for a few more years, we at the age now, we want to actually see the whole life of euro. We're going to see the euro come in. We're going to see the euro go up, and we're going to see the euro just die and remove itself out of existence. That's what currency do every day. Currency on the whole is just a continuous downtrend. No matter what, the currency, no matter how is it doing, no matter what's going on, it has the up and down. But if you go back in time to the US dollar to right now, the US dollar doesn't go up, it goes down. So gold usually go up, but now Bitcoin now, it's what's taking the place of gold. So, because everybody used to say, okay, your money is going to be backed by gold, but now they're backing the money by Bitcoin. So sooner or later, the Bitcoin is going to be stronger. And that's why everybody's moving towards the Bitcoins, because it's taking over, because they need a new currency, because currency is getting weaker. The US dollar is getting weaker and weaker and weaker. And before, I say it a lot that I'm not really that crazy about it. But at the end of the day, if the U.S. government be like, you know what, we're going to outlaw in Bitcoin, we're going to stop Bitcoin, we're going to stop that, it's only going to make Bitcoin get more valuable. Because if you outlaw anything, if you outlaw alcohol, alcohol gets more valuable. You outlaw weed, it gets more valuable. So even though they said, okay, weed is legal, the price of weed is going to drop because it's but if you outlaw it, it costs more. If they make oxycodone or coke legal, the price is going to drop because now there's no risk involved. So the price of the dollar is just the value of the dollar is dropping. So that's why gold is not doing that great. It's supposed to be all right right now. Silver is actually almost going to start doing better than gold after a little bit. Just give it some more time, but silver's going to start doing better. But the dollar is losing value badly. So
I thought it was based off of, I guess, what's the word I'm looking for? Like the availability of it. So the more scarce it is, like gold and silver, the more it's worth.
That's what they told them. That's what they tell amateurs, and they want people to think the marketplace. But there's those rules are no longer exist. Gold is actually abundant on this planet, extremely abundant. You see, they printing dollars by the click of a couple of buttons on a computer screen. They're printing money. So it's not scarce. Bitcoin is scarce. It's only a certain amount of hashtags and coin they can develop, and that's going to be an entire Bitcoin, and that's why you see the inflation of the value of it. But supposedly, the scarcity of a product and the marketplace of the market decides the value of the item, not the scarcity of the item. The market just decide to create a marketplace, and what somebody's willing to sell it for and what somebody's willing to pay for it. What's decide the marketplace. And usually that's manipulated by people who control the market, who control the commodity, who control the resource, and then they create the market. They'll say, hey, we ain't got this, and it's only a limited supply, and we're selling it at this price. And then they'll create the hype, and then they'll keep spiking the market, thinking you got to pay all of this money, or and you don't, and you find out, oh man, they got a lot of oil over here or a lot of gold over here, and the price will drop. Nobody wants to pay for it, and they got to lower the price because we now know you lied, and you have abundance amount of it. So the market is determined by the participants, whoever's willing to pay a certain price, whoever's willing to sell a certain price. So you can think about that it's scarcity and it's going to make the value of it go up. And in some cases, that's true. But now in this new age, the way the markets work, all those rules are out of the window. This is just a straight zombie, wild, wild west market. Elitists and people with big money control it and decide where the price can go. You just want to actually figure out what they're doing with it and go on that side. And Elnora, I want to know what was you thinking when you picked this stock and what made you look at this, because it is volatile and it does do rapid price changes every month. We talked about 2 months ago, it was 140. Now we're back at 184. From the previous day, it was at $73. A $10 move in a day is huge. So 100 shares, and the next day, this thing you made $1,000. So this, I like the movement of it. If you can know how to time this type of security, this type of fund, if you can time it well, it looks interesting to me. As far as off of gold, but it's definitely, as a day trader or swing trader, it looks interesting whether I'm trying to short it or whether I'm going to go long, because the price movement is ridiculous, not for nothing. And that's what day traders look for. We look for that volatility where the price jumps dramatically from day to day. And that gives us an opportunity to make money as it's going up or if it's going down. So to me, it looks like a hell of a trade for the volatility of it. But it definitely makes it also dangerous. And it has to be, you have to be an advanced trader to trade this thing, and you got to time it right. You can't sit on it for long. You can't think you got it figured out, because obviously it's got some huge gap downs from the price, from the daily. And now we got this consolidated range anywhere from between, 20 or 50 up to 100 and change, up to almost 200. So to me, that's a consolidated range right now. and you know, it looked like it's ready to make another move lower. To be honest with you,
Looks scary to me.
it
I'm
looks
scared.
very scary. I would trade it personally. It's a derivative ETF off of the gold miners. So it's not necessarily related to gold. It is related to gold, but it's related to the mining explorates of gold. And I don't know where that space is. I'm not a expert in that area, but just based off the chart, like Ju said, it is losing value because definitely a lot of investment is going into crypto. If it wasn't for cryptos, a lot of those asset investments would be into securities like these. It would be into stocks, bonds, mutual funds, CDs. But because of crypto space, a lot of money is being funneled that way. So all of that money that normally would go into these asset classes is going into crypto. So you see in the devaluation of some of these stocks. So for short term, it's a nice ticker to play with because the range is incredible. But be warned, it could cut your whole account in half.
I don't know. All the stocks that we looked at for you tonight, Eleanor, they look crazy. They look dangerous.
No, I like to see this. This is.
I'm saying I like it. I like it, but it just look like, you know what I'm saying? Like, you know, we're juggling knives. It's dangerous. They're very, very dangerous. You got to be very careful because they could make you rich and they could make you collect bottles on the side of the highway.
Yeah.
Like they're very volatile and they can make very powerful moves in either direction.
Either direction.
By the snap of a finger. But the only thing with gold right now, like I said, gold is like with me, that's just my personal opinion. Like with crypto now, with Bitcoin, you see, if you could own like 1.28 of a Bitcoin, you're already in like the 10% because there's not enough Bitcoins to go around. That's why the price keeps going up. So if you don't even have to own a whole one. All you have to do is own like a quarter of one. Anywhere from there, which will cost you, 1.28 will probably cost you about maybe 17,000, 18,000. And you're already in the 1% already of who owns it. Because it's gonna go. It's new, it's young, it has no top. It literally has no top because everybody's trying to buy it up and they continually buy it up. And there's just not enough. So again, you already know the simple rule, supply and demand. And if the supply is not enough for everybody, then demand is going to go up and the price is going to go up. So, and then the more that happens, the more gold is going to come down because they're going to take their money out of gold and put it in Bitcoin because you're going to always want to put your money where other people's money is and where it's all moving until somebody ripped the rug from underneath it. But this right here, I don't know. It's volatile. Personally, I think there's a lot of other places where you can put your money where it'll probably work for you without the headache that this may give you. Because this would give me a lot of sleepless nights. I've been through sleepless nights. This right here would give me sleepless nights. Because the day when you sell it is the day it shoots to $200. You know what I'm saying? And the day when you buy it at $200 is the day it dropped back down to $60. It could make moves like that. From over here, you see it was $140, then it dropped down to $20, $30 loss in one day. It depends on if you decide that, I want to play this game. I want to get into this and I want to see what I can do. But then you got to get deep into this. You got to sit in front of this screen and lean forward. With all the stocks you just picked, you got to sit on the screen and lean forward and look at it and really steer it and learn the behavior of them. And then try to just wait for that weak point when it's about to pop and jump in it then, and then get out next day or 2 days later.
Well, the good thing about this chart on the daily, at least in the beginning and the ending of each month, you see some trends. And whether it's sliding back or whether it pushes, you got these mid-month trends or you got a total month commitment trend. So it at least is showing that. It's showing these trends in the entire month that you can probably time. So off that, I like that part. But it definitely, again, is still, you can lose your hands. You can lose your arms. Next,
where we at? I think it was done. Space. Virgin Galactic. Let's see what Virgin Galactic is doing. This is my bestie, one of my besties. Let me see. I think I got space if I'm not mistaken. Don't I?
What's your plan for this, Honora?
I don't really have a plan for it. I was just looking
Why are you
at it.
looking at it?
I came across it.
How?
Yeah.
I have like, I don't know, like I just like may search one stock and then I'll look at the recommended stocks that's
Okay.
underneath it and then I end up somewhere else. Or
All right, fair enough.
Where
I
do you
like it.
find your recommended stocks at?
on my
Like what
Robinhood,
platform?
like
Oh, okay.
on Robinhood.
All right, this is a speculation stock. They're talking about going to space, which is no market for it yet. But even though they're taking money from people, like a lot of money, what are they getting? I think per person they were getting like $200,000 or something like that. Oh, I forgot what the price was, but they were accepting people that were willing to pay for their seat to go to space. They're going to be doing commercial flights into space. I think that's definitely going to be happening. The infrastructure is being built right now. I think we're 20 years out from that. But these guys, as you can see, just on hype, people were buying it, getting in, and the stock rammed over $20 and then jumped up to 60. And then that hype, people realized, listen, we ain't going to space yet. All right, dump. So the price couldn't maintain, and we're back down near the 200 moving average, which is, you see what happened as soon as it hit the 200. What did it do?
Bounce.
Boing, it bounced.
But this was still sorry, I didn't mean to cut you, but this was still part of the crash why this kind of dropped to the quote unquote crash.
Right. We're getting that market contraction off of tech stocks and speculation stocks, and people are actually running for battening the hatches and trying to cover and run for cover. I like this as an investment growth stock, but also this could go bankrupt because this could be a bust. Somebody else could go get us into space. Somebody else could compete in the sector, but these guys are actually gearing up for the next 50 years. So I do like that. So maybe when you get old, oh shit, I'm glad I put a little bit of chips on the space stock because it's a go now. You know,
Your kids will love it.
I'm a part owner of Virgin Galactic. You know, how did you get this money? Oh, I invested into space exploration and space commercial flights to space. I'm a part owner. Even if you own one share, to talk that type of crazy crap, this is a candidate for that. Along with, there's a few others, right? That's dealing with space. I think
Not much.
It's not much. It's not much.
Didn't they landed a spaceship the other day, didn't they? If I'm not mistaken, was it
not
them?
these guys.
Oh, okay. Oh no, they have the other plane. They have another plane.
They got another plane. Yeah, they came up with
Right, the plane that goes up. I'm sorry.
Commercial freighter that goes up. So I like it. Buying down here is cheap. I would pick up some, but also I would look for this to break back. If the world goes into another panic, I would look for it to break lower, probably back under 20 and under $10. And I'm gonna pick up some up down there. And then I'm looking to hold this probably for the next 10 years, 20 years to see what it do. So don't go heavy. It's just when you going out Friday night, instead of going out Friday night, pick up a couple of these joints. All right, skip a date night, stuff like that. I'm gonna pick up a couple of hundred here and there and just park it away because in the next 10 years, you might do yourself a favor. It's high speculation that these guys are gonna win, but I like the idea, if you know what I mean. And that's it. I wouldn't look for it to, now that we know that the space shook out a little bit, I wouldn't look for it to, all right, I'm going to do some long calls. People are going to start investing in space again. They're a little behind what Elon Musk is doing and what Amazon is doing. They're running satellites into space right now and trying to get a market share of the space internet. So that's what them guys are doing. And so these guys are trying to focus on commercial flighting for space, but there's no real, where you going when you get up into space? We just taking the plane right up there and just going to glide? But we need a
That's
destination.
it. Just
Going to
go stand
Mars.
around.
Where we going to a space station? Oh, we're going to the space station. It's a club called Space Station. We're going to party up there. DJ Self is up there. He's spinning right now.
So I'm not up there too?
Yes, you are. Black Terror's up there too.
There you go.
They're up there. They got a party up there on the space station. What's up? Come through.
They're gonna need a OBGYN up there.
They're gonna need an OBGYN. So, yeah, this is definitely long term for me. I would do it long term if I had the money to do it. But me personally, I do not like doing none of that stuff because, the world is just is a totally unstable place. I don't know who or where it's going to do. But if I was long term, I would pick some of these up. It's nice and cheap near the 200 right now. I would do it. What's next?
I got a few. All right.
Go.
No, I'm saying I got a few of those. That's it. That was it for Nora's list. Nora's list. What are we doing about last night's list? We didn't quite finish last night's list.
No, you can go back over if you want. I got another some long-term watches, the big boys I wanted to go over.
Spit them
just
out.
briefly.
We're gonna instead of typing them up like we did last night, I'm just gonna type it as you call it, and we'll go at the same time.
Okay.
Talk to me.
Roku shook out from that whole technology sector. Roku's been getting hit down. Tesla's been getting hit down. Facebook is chopping around. They look like they're going up though. They're looking ready for a big breakout. Not for nothing.
You going? I mean, you gonna look at them, or you just gonna talk about them?
You would look at them if you want. Let's go through them real fast. Okay, Roku. ROKU.
Okay.
All right, Roku's been making this huge move since last year. It's in the heavens. I think the high was like 486. We're back down at 332. Recently, it's been dumping off from the tech sector. But remember, the last 3 weeks, something's going on, guys. Last week, off that tech sell-off, a lot of stocks was finding a bottom and starting to return back up. And not for nothing, I like Roku because Roku be making these moves that you can make some money on the daily. So sometimes they be doing these 50-cent, $40 moves, $20 moves on an option call. It's very liquid and it moves, it gets cooking. You got a couple of days where this thing pops. If you see the daily, it's got these pop moves. And now the last 3 days off $300, we had a couple of boing bounces back up to 330. So I'm thinking it might actually make another move and try to claim higher, maybe over the 50 for option trade. I would look at this one for an option, guys. Roku, because it does make some huge moves. And when they want it up, it gaps up. When they want it down, it's gapping down. But it looks like it's in a position. So let's go to Tesla. TSLA. Okay, Tesla. Look at Tesla. Looking like it's in a buy zone. It's coming down.
Roku was in a buy zone also. You didn't give me that. I mean, it was Russian, but
Roku's in a buy zone. Yes, it is.
Yeah, it was in a proper buy zone. It just bounced. It was about to bounce off of the 200, and it didn't make it down there. It's caught support, which is good.
Right.
So that means now it's already on its way back up.
Ready to go. All right, so here's the same setup. It's tech related in the same sector. Tesla, not a car company, it's a tech company. And it shook out from that 900 push all the way down to 5 and some change. Kind of caught some support, gapped up considerably well the last week, but we in this consolidated range of between 6 and 7. I would look to pick it up on the low 6s. I would look for us to gap up over 650, over to 7. That's the day range I would play with. And if it makes a move, and this is what an option, I would use option calls on this. If you want to invest long-term, that's another story. I would do some option calls out though for 2 months and see if I can play for over to 650 or over to 7. I would look for a resumption and maybe go lower. Maybe I would want to pick it up cheaper, but you can see it's bouncing off that 600 real well. So we got a couple of tests there, and it went lower, and then they immediately cooked that thing back over. And here's 1, 2, 3 wicks touching 600 last week. But guess what? Boing. Let's get this thing back up. And now we're looking at a move. It's looking bullish from the last 2 days, 3 days. So we got to watch it on Monday and Tuesday and see what direction they want it to go. And if you see some high volume coming in, you could do a day trade on an option, maybe long or put, sell a put. But I like Tesla. Next, Facebook, FB. If you tighten up the daily range, Facebook has been talking a lot of trash. They got congressional hearing meetings, but right now it's been holding, and then now the 200 has been coming up into. And what happened right now last month? You had divergence. You got all of the moving averages coming to a convergent point. And what happened? Boing, it bounced to the what? Long side. And you see it right there. All 3 moving averages are all saying, hey, what are you doing here? What are you doing here? What are you doing here? And at some point, these guys got to break away from each other. So that was a buy zone. And look what happened. It went red, and all the big boys were coming in. You see it. All of that's indecision candles that Juice is pointing at. And then you finally get the move in the next week, and it pushes, and then it sells out of that hypeness, and then it's looking like it's going to make another move up. So this is looking like a bullish flag to me, and it's ready to make a move higher. So Facebook it is. Facebook is already reporting record-breaking dues for revenue as far as ads and doing that ad revenue space where they sell into small businesses. So it's huge. It's a machine. It's an animal. And look at that. It looked like it's ready to break for the 320 to 340 with the float.
It's
So
gonna
I would
go.
go on Facebook. That's what I would do. I would look for a move over 300, and I would look for that move to see if it's going to squeeze up to 320. And because you see, there's a move when back in last year, August, you see that move, that candle, that crazy candle that it went from, what is it, 280 to 300, and it was a gap up, and we had several gap ups. It was a gap up from the 230, and then it squeezed up, and then it gapped up again
This
in
one
the
here.
few days, and then it gapped up some more. So it almost did, in a matter of a month, $100 gap, and we're looking at that same setup almost again. So it's coming up here.
It was chilling out, but it's ready.
It's ready.
The ideal buy would have been right here in when all the three lines got together. That would have been the ideal buy point when it dipped back the other day. That was like 3 weeks ago or so, 2 weeks.
Yeah.
Also, when it dipped back here, that was the ideal buy point. Like, close your eyes and just buy this shit. But
Okay, don't forget, along with Google, we're going to Google next. Facebook, Tesla, Roku, Google, Netflix. These guys use artificial intelligence. That's what's driving these things. The data that they consume, that they have on us, and the AI that's able to take advantage of our data and them leverage products for us, into us. So they're making money from us, but it's because of the AI technology that they're using. Roku, Tesla, Facebook, Google, Netflix, you got a few, NVIDIA, it's a couple other companies like that, but they're using AI data, and they're powerhouses. Google's another one. You can go to Google. I don't know who's investing in this and buying it, but Google's just doing phenomenal. It's
what was
up
Google
there.
again?
GOOG,
Oh yeah,
and it's a GOOGL, but and they're relative, but I think one is class A and one is class B. But it did this gap up in the new year, and it's making all-time highs, and the thing is smoking. So you see a divergence off the 50-20, and every time the 50-20 gets together, it seems like there's a powerful explosion here. If you're paying attention when the 50 and 20 meets, something happens. 50 and 20 meets, something happens. 50 and 20 meets, something happens. So we're seeing a pattern here, and they've been only getting stronger. We know that we actually need to uncouple from them because they got too much data on us, and it's the secret backdoor to the CIA. But look at them, they're rewarding them. Wall Street is rewarding them. So you got to go where the money's flowing, and you can see it's going up. Netflix, NFLX, here's another one. All right, look at Netflix. Now, here we are. We got the same situation. Here we go. It speaks for itself. You're reading the chart. You got a couple of moving averages starting to diverge and come into each other. And Netflix has just been a performer. Now it's basing out and consolidating at this 5. But guess what? It's still bullish. It's still looking like it's ready to make a move higher. They got an algorithm running, and they got several algorithms running in Netflix, by the way, FYI. And Netflix is acquiring rights to movies left and right. So they're trying to boost their asset holdings so they can have better subscription, deeper movies, despite all the stuff going on. It's just crazy. This is, they're beating out Viacom and them. They're competing against big boys, and I think they got a price target of 600 out right now. So they're probably going to make the move. Yeah, I think. Let me see.
it's bouncing off the 200 right now, clearing the 20.
Overweight rating and price announced target for 605, which is overinflated. But guess what? It's look at it. Look at the chart. It's definitely froggy. It's got crazy gaps in each month of the volatility range of 5 and 550 or 455 over since the previous year. And it's only going to keep ramping up because guess what we do? We Netflix and chill. So we're making them rich. So next, AMD.
Who?
AMD.
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 Okay.
Advanced Micro Devices. All right, AMD is competing against Intel, a couple other chip makers, but they're second in the marketplace to Intel. So AMD has been getting a lot of attention in the previous 6 months, last 2 quarters, and the price has gone up. Now that we had a tech shakeout, right now there's a concern that they can't get enough materials to make chips. That's their issue. And you've been seeing a little pushback, but they're competing against Intel real well. So it broke the 200, which made a bearish signal. And we got a bearish signal out on AMD right now. It broke the 200. You got the 50 coming down, the 20s coming down, and that's a descending chart pattern right there. Even though you got some support here, it didn't bounce off the 200 readily, and it's trying to claim the 200 now from the previous week, which looks good, but you got to watch this because it might go back up here to the 90, meet some more sellers, and the shit resume back down. So I like that they're gaining more market share, but I think they need to make another move lower, and maybe we can pick them up at the 70 or the 60 or the 50 even, and then we can look for a curl going back up, as long as chip supply is not hurting them, and that's what you need to look at that. And it got to be demand for their goods, for their stuff. So you got to play it close, but still, AMD is in a bullish cycle. Still from the previous year, AMD is still in a great position. Shopify, SHOP. Crazy bullish move from the previous year. You know, $400 up to $1,400 is at $1,100 right now. Shopify.
What was that? Hey, what was that?
SHOP. Not for nothing, Kathy Woods holds this. Some of these stocks we're mentioning is in Kathy Woods ETF. That's why I was saying overall, you don't have to do the heavy lifting. She'll do it for you. But this is another one of those Tesla, Roku, Shopify is in her list. As you can see, Shopify made the move from 400, 500, cooked up all the way to 1,400 over stack in 1 year. That's pretty damn fucking huge. It's coming back to the 200 right now. It's trying to bounce over a bit. It tested, broke it. And this is tech, but a lot of entrepreneurs are using this platform to sell their goods and services on Shopify. So, and the space is growing, that more and more entrepreneurs are coming to the market space. So Shopify is gaining even more marketability and traction and the ability to make money. So, you got to see if this is an upgrade or downgrade, but I think there's a rating out for 1,300 or something like that. They got for a price target. So right now we're at 1,100. We're looking to make another move back higher. It just broke the 200 and it looked like it just claimed back over the 200. I would buy it at 1,000 or 1,100 on an option call, maybe 2 months or 3 months out, and see if it can claim back to 12 or 13, make that money and keep it moving. Next.
What do you think about real estate stocks, investing in real estate stocks?
I would do some REITs. I would see if some of the REITs, they're doing great lending programs. They got land banks they've been buying and getting developer or builders to come in. And those builders, along with the REITs, been selling those products. And actually, there is a demand in certain counties, in certain states, for more products on the market, meaning more homes. More low-income and middle-class homes are actually in demand. I've been reading some reports that counties are actually petitioning for land banks, people to come forward. Land banks are basically conglomerates of land that an organization or a person might particularly hold, like acres of land, and they want to develop communities, shopping centers, business centers, where they're developing communities. And you got to research when you do invest into REITs, those type of securities. You want to look at the space they're in. Are they profitable? What are their plans going forward in the future? And they move a little slower. They tend to move a little slower, but then when they make good decisions, the market rewards them, and they do get gap ups, but not as aggressive as the tickers. Some of the tickers we trade, day trade. But it's another great way of holding real estate. You just invest in the REITs because they're doing it for you. You're just you're financing some of those loans in the balance sheet, the bank, the loaned out, and how they do their investments and how much money they make back in. You get the profit from that. So I would do REITs, but definitely REITs is part of a long-term strategy when you're going out for 5 years, maybe. I would do it in cycles, a 5-year cycle when something develops from implementation to execution, and profitability is when they're actually getting those loans settled and people are actually paying their mortgages or paying off their mortgages and those loans. And then that's profit for the bank and that's profit for you. So you got to keep in mind that those timeframes are a little more related to mortgage products. So those, you got 5-year, 10-year, 30-year, 15-year mortgage products, depending on whether commercial or what do you call it? commercial, or what is the opposite of commercial? Home?
Residential.
Residential, thank you. And I would play those, but there's a longer time frame, and I would do those a part of, if you are working at a job and it's part of your retirement is in some type of fund, you want to diversify and have some of your retirement into some of those funds, and you can find them and choose them. That's where I would do that investment, unless you got extra cash sitting on the side and you want to do that. Next.
All right, thank you, sir.
Yes, sir. BYND. Beyond Meat. This is a sector that's been heating up. It's pretty high. A lot of people think it should be lower. Think it's inflated, but Beyond Meat is volatile. It's still not accepted, but we do have a global problem where Bill Gates brought up most of the farmland. These guys are making meat. And this is a speculation play. I personally like it, and that makes me biased, but we have a convergence. It's a bearish flag right now because a lot of the big boys were getting off this stock, and you have nothing but a bear flag going on right now. Huge bear flag, because this is a technology stock. Yeah, they do meat products, but this is tech that got us here. And it's still above 100. I would look for it to break maybe 120 and pick it up. If it moves lower, the competitive space, I don't know who else is competing in this space and coming into this space, but I think if one catastrophe of a food shortage happens, this stock is going to be on fire. We have to wait for that moment. And we do have food shortage right now, and we do have inflation kicking in right now. But once it goes a little more national or global, that there's a food supply shortage of meats and farming and stuff like that, which we already have, but they're not ringing the bell. This one is going to be a target where, all right, folks, go long. It's going to form a bullish pattern on the daily, and then you got to get ready to start going long. But right now, that's not the case, but I would keep this on your radar. Next, Apple.
Hold on, let me clear this out.
That's BYND. AAPL, Apple.
What's AA, right?
AAPL. Apple, another AI tech stock. They use a lot of tech, a lot of AI. They're developing their own chips. This is why we're talking about Apple now. Apple is coming into a buy zone. All right, the 200 is up there. You got a divergence of the 50 and the 20 intersecting each other from that tech sell-off. But right about now, it's finding the floor. Where's the floor? 120. It's finding a base, and it's basing out right now from last month into this month and going into this month. We'll see what happens. But this 120 looks like a move. Something's about to happen. Why? Because Apple is making their own chips. They're getting out of Intel. That's more money for them. And if they come up with new product and technologies, which they do have coming out, Apple could be a serious situation. And they have a loyal fan base. There's a lot of Apple users here. I would buy Apple long. I would do some options on it long. I would do some buys on it long. Apple's probably going to make some moves in the next 3 years. This thing is going to be probably on fire. Next. This is a unique stock. ANET, A-N-E-T, Arista Networks. And it's been bouncing around from 200 up to 320. Okay, you had an intersecting of the 200, and finally it made its move in November. The 200, the 20, and the 50, and it took off. Okay, Arista Networks is a conglomerated media group of networks, and I think they're it's California, Santa Clara, California, and it's electronic instruments and controls, and they're dealing with the tech sector. Now, there's a bullish sentiment out on the stock, but right now this is a little pricey, and they're making pounds of money. But right now we had this tech sell-off, and now we got this skip back up. They claimed their price from down to 385, 285, back up over 3. And that's what we have right now. So somebody wants this stock up, somebody with big money. And it's not a lot of volume going on, but you had this tech sell-off from 320, and it went down to 280 and caught the bid at 260 and caught the bid again. It's back up to 3. So if you want to play this one, I would go long. It looks like it's bouncing. And you can probably make some option chain money on it. But this is also tech again. Okay, next, NVIDIA, NVDA. part of the AI algorithm stock, and also mining, also video cards, also computer processing, manufacturing. So it had consolidation for quite a while in this range. And now we're bouncing. What do we have here right now? We have 3 moving averages coming into convergence. And that means what, folks? It's been bouncing off this 500, looked like it's ready to make a move higher, and it did. The last few days, it actually says, you know what? Let's get ready to start claiming 600 again. Because it did give that back since that tech sell-off. But right now we have a bounce off the 5, and that means 550. We can either go either way. We can bounce some more and claim 600 again, or we can resume back down to 500 and maybe bounce up there and probably make a move lower. Who knows? But we definitely at that spot. Why? Because the 250 and the 20 is all looking like they're trying to talk to each other, and we can't have that, because when they talk to each other, they start having babies and it starts spreading all over the place. So we're back at that point. All right, next. Zoom, ZM, the application we're using right now. It's had a huge sell-off from 440, some serious gap downs. We're back at $300. But guess what? We just went under 200. What is that juice to you?
Bad. It's gonna come back up to it.
So is it a buy zone?
I mean, it's gonna magnet back up to the 200, so it is a good place to buy. It's at the 20 moving average right now, so you can buy it. And I mean, I don't really know why Zoom, like, I'm thinking what's happening with Zoom is that because of the vaccine, it's not doing too well.
It's overvaluated by FYI. There's a price target of 250, not 300, 500, and all that. So first of all, Zoom got too much valuation, too high, too fast, and everybody in
Right. Well, all the valuation came off of because now we was like, well, we're stuck into the house, so we're gonna have to Zoom, and this is gonna be our life. But now that the people are come back outside, Zoom is actually still dipping. So it's not one of my favorites. I don't really like it.
What you want to say is the subscription base quadrupled. That's why the valuation got higher, because we, as participants, drove into this particular one, and we drove it higher. But the valuation on Wall Street says is too high. They wanted to come back down. Even they love it, but they wanted to come back down, and they think it's going to be the wave of all these streaming conferencing apps. So they said they've been saying that, hey, this shit got too high. It's got to come back down, and we want it to come back down so we can buy the shit. So Zoom is in that category, but also the buy rating is from anywhere from 250 to 360, and the thing was just at $500. So it came back down, and now it's in the buy zone. Some people want it lower. Wah. So we'll see what happens. Watch it. It's definitely a hot ticker because it's a blue chip now.
About at 300 is a good spot to buy.
Yeah.
And it's going to go.
All right.
I
All
like
right.
it anyway.
DOCU, DocuSign. All right. They got a price target initial coverage of 239. And some people think they're not a buy right now because they had a crazy push since last year, over $100. And now we're over there, up there, 250, 200. But guess what we got again? 3 moving averages converging again. Hello. And we do have a situation. Either it's going to make another move lower, or we're going to hit our price target, and it might squeeze up to the 250 again, and then the trade is over. But people think it's not in a buy zone. Tech is shaking out right now. This is tech. But DocuSign, we are getting more of that type of stuff where documents and secure documents need to be signed over the web. Is getting more popular. And here we are, DocuSign. Okay, moving on. Walmart, WMT. All right, we all know Walmart is a staple item, right? It's not going nowhere. So the last 2 years, Walmart has been cooking from $100 and then went up to $155. Do you want to trade this? No. But why would somebody want to own Walmart?
Because like you said, it's not going anywhere.
It's not going anywhere, right? It's in the same range, right? So moving along. I guess that's not for us. So INTC, next, Intel. INTC. Skip that shit right away. Don't even do an analysis. All right, Intel's been getting shook out from, again, same scenario. They probably pay a dividend. It's been shook out from AMD. I don't like the chart. It looks like shit. been shaking around the 60 and 40, but it does have crazy gap ups in the daily from these crazy ranges. Can you read this? I can't, but I can, but I can't. But look at it. What would you do with Intel? Intel is a global name and chip provider. They make their own stuff, but they've been slacking on their development and innovation. And I guess some of the boys has been picking it back up because it definitely bounced off the 40 and came back up to the 60. I don't know what to do with this. I personally like Intel, but I don't know what to do with it.
Buy it.
Buy it. Okay, there it is.
Bouncing off of it. It's at the 20. It's a little bit at the 20. Take it.
Okay.
Still a little bit out the buy zone, but I would take it. You know, you have two things. It's Intel. It still has a backbone, and they're still into a lot of shit. So it has a backbone. I would take it right here. If it comes back down to tomorrow, watch it. All these stocks that you see that's the kind of reddish, watch it tomorrow and see what it does. If it comes back down below like $63, pick it up. You know, and $60 or so, pick it up because you look, it's still growing. You know, even with this big right here, they're gonna come back and they're gonna claim this and it's still going. It's still pushing. So I would still pick it up anyway. Anyway,
Next.
here in that buy zone.
NKLA. Remember this? Whoever's holding this, I suggest you get rid of it. Whoever's holding that, I suggest you get rid of it. That's all I have to say on that. As you can see the chart, everybody's running. Okay, cool. Everybody's good on that?
I'm good.
NKLA, run. WKHS, workhorse. Yeah. All right,
Ugh.
run.
Ugh.
Run. Whoever's on workhorse, run. This was hype a minute ago. Right now, run. Okay. Visa. V. Let's go to V. You know they've been around for a long time, right? All right, we missed it, but this is for the OGs. This is the OG stock. But as you can see, Visa took a dip from 200, flew down to 140. They propped it back up, and it's making these little $10 moves on the daily, and a couple of gap ups here and there. Look like it's ready to make another move up. And yeah, Visa has been trying to get with the crypto space. They're adding crypto to some of the Visa payment systems. So that's going to bring some new energy to Visa, not for nothing, with this crypto crap, them being able to accept crypto and all that stuff. So that's the new thing. They're all trying to get a little spike in their situation. So they got a little long-term aspect going along on it. All right, moving along. Snow, SNOW, new stock, got cooking really fast and gave back the majority of the move. All right, a lot of people like Snowflake, but unless you caught it and got out at that big dip, guess what, folks? The chart says a lot of people like this, but it doesn't look like it. These companies been either selling into the moves, and their price target must be pretty low. It's a new IPO. They got to outperform on them, but cautious is volatility. It doesn't make it friendly for an investor that's going long. And right now it's looking scary. It looks like it's ready to make another move lower. So I would be careful with that one. Next. mRNA. This is Moderna. These are the people that's been giving you the jab, right, in your arm. Right, vaccine situation right here. Since last year, when the pandemic broke, my attorney was telling me to invest in this puppy at $90. And did I do it? Nope. That sucker flew up to 180. That would have been a hell of a move. And right now, they're still rolling out. And this is free money that the government gave them. So it was expected that they come back up. And let me see here. Phase 2, they're going to be doing other stage vaccines, discussing why he doesn't own Moderna. Let me see here. National. All right, Moderna. Moving on. Looks like a dead stock to us. Who cares? SRRK, Scholar Rock Holdings Corp. Let's skip that. NIO. Let's go there. Let's talk about that. NIO. All right. This thing was smoking. And it came off this nice little tech sell-off, and I think it's at a buy zone. Yep, bouncing up to 200 a little bit. NIO is a nice little buy zone. China government, electric vehicles, AI in their cars, technology. I like the stock. Me and Juice was trading it when it was under $5. We tell ourselves this is the Cinderella, and we did not listen. And we should have loaded the boat on just this one stock alone. It would have been Donnell Rollins, rich bitch. Yep, that's the move it's going to make. And yeah, so I would pick this up long, option call out, give it another 3 quarters, and you probably have some good chips. That's what I would do. I would do a 1-year contract on this, maybe 6 months, but I would do a 1-year contract on this option out, and this will probably get you some good coin. FYI, NIO. Next, Disney, DIS.
Hold on. Option out to what price? Like about what?
Over 65. We're looking for it to claim the high.
Okay.
And then still go. But you'll be fine over 65 though.
Okay.
All right, Disney, DIS. We all know what they're giving us, new competitors in the streaming space. But Disney is bigger than that. Disney World, Orlando, all that other good stuff. And Disney owns a lot of film productions. And as you can see,
They got a TV too, right?
DV got the Disney app, yeah.
Yeah.
And they've been cooking. So Disney, when all 3 bands got together, they decided to say, all right, I'll see you later, bro. And it took off. So we up there at the highs right now. I would love it to come back down to the 60 or 70, but right now,
That's selfish.
it's okay. It's okay. Right now, I expect them to be a little more higher. I expect them to be higher. They're doing some more partnerships and stuff. I would want them to be up to $300 and some change. That's a bullish bet, but you know, they're adding more repertoire, and the more they grow, if they grow like Netflix, in 2 years, 3 years, Disney is going to be a juggernaut in their own right. So Disney right now might be still cheap. I personally want it lower, but I would do a long call out on Disney if I was an investor. On an option, I don't know. On an option, I don't know. Blink, BLNK. Somebody's favorite stock. All right, Blink had a huge move. What were they doing? Charging? Blink charging, 35 mil. This is a very volatile stock on options and on the ticker. I would do a long call. You know, I would do a long call. You definitely had this tech sell-off from last month and maintain some consolidation here, breaking over 45. I would do a long, back up to 50, but I would wait for it to claim 45. Next, Amazon, AMZN. Let's just look at it real quick. Okay, Amazon started really getting some real strength hype last year around the same time. They pushed over 1,800, flew up to 3K, and they've been consolidating ever since. It's in a bearish pattern right now because it's been meeting and breaking moving averages. So it's been trying to claim and hold itself up, but how far can Amazon go at this point right now? They're evil. And in the next 5 years, I think Amazon is going to probably go a little lower, but then they're going to make a move higher because they're going to try to compete with Elon Musk with the internet, the space internet, beaming from space. So that's going to boost their profit sheets. And they got some other tricks up their sleeve coming down the line, but they're in trouble right now from labor issues. And you're seeing that divergence right now from their highs. But it's pretty lofty. I mean, investors who've been here day one, but Amazon is not going anywhere because we live and die by Amazon. And pretty soon it's going to be Amazon now, not Amazon Prime, not Amazon next 2 day, not Amazon same day, Amazon now. They're going to be at your doorstep before you order the damn product. So I don't know how they're going to do it, but they're going to do it.
I think what Amazon is going to do, their next big move, this is just me thinking, and they're in line for it already. I think they're just about in line to start competing with FedEx and UPS. It's something that's crazy, but they have their planes, huh?
You want to do your research because Amazon is definitely, they bulldozing on a lot of space.
Right, but they have their planes, they have their, everything is in line for it. All they have to do is just start picking up because they do deliveries, but they're not really picking up. but they have the planes, they have the trucks, they have everything that FedEx and UPS have. So the infrastructure for doing shipping is there already. They're already at your door. So if they just press one button, pretty much one button, they're gonna have UPS and FedEx pressed.
Yep.
Because they're everywhere already.
Yep.
Okay.
Let's go to ON. This is a heavy float, but I like this ticker a lot. This is definitely a bullish pattern that we have. This is semiconductors, and these guys are getting a footprint on the semiconductor space. They're out of Arizona, out of Phoenix. They deal with technology, and they got 31,000 employees. They're pretty big. They're all over the world, and they're making moves. And it's only a matter of time that these guys are going to go higher and higher. The 52-week high is at 42. These guys are at 42. They just broke the 52 high. Juice, what's my rule if a stock hits the 52?
I don't remember your rules, sir.
Normally, stocks that hit the 52-week week high go higher. Correct?
Yes. They
It's
do
not
go
a
higher.
rule. It's my rule. It's not. It doesn't make it a rule, but anything that usually hits the 52, it
Gets a lot of publicity.
It gets a lot of publicity. Hey, 52-week high, it might be going higher. So they've been doing really well. I would do a long one. I would do call options, and I would look to see what goes higher. How high? I don't know. Research the company, see what they're doing, see if there's any incoming expectation of profit and revenue and growth, which I think it is. Everything is going tech, so these are one of the suppliers of that. And this is a nice price. The float's a little heavy, but it's a nice price of things to come. So there you go.
But this dips a little bit when it hits its high, as you can see here and with here.
Yes.
So when it hits this high, you got to watch out for this dip to come back down and do the same shoot again, because it's been doing it. Comes up high, raise up off this 20 really hard. And the harder it raises up that 20, it tends to return back below the 20. Raise up off the 20 hard, return back down to the 20. So that's a simple pattern. That's a regular pattern with it. So when it raises up here, you can look for a dip. You know, you can pick it up, but you can wait for that dip when it comes back down to here, because it's gonna dip maybe 2-3 days. I mean, you know, maybe about by the end of the week it's gonna dip, because that's the pattern it's been doing anyway. You know, about 2 weeks of going up, and then if it raises really high off the 20, as it did here, and even over here, when it raises that high off the 20, it tends to dip below the 20. So I would wait on this a little bit. You might catch lucky and catch a piece of it going up, but it'll probably hit 45 and start to dip back to that 20 immediately, because it doesn't go far from the 20. It visits back to 20. It's a little high for a buy though, a little bit. I'll give it a couple of days and see, let it get itself together first. It's a little high.
Right.
It's not quite the buy zone.
All right, Viacom. Dwayne pointed this out to me the other day, so now I took a look at it. VIAC. Viacom CBS. VIAC. Caught a heavy dip. People think it's going to bounce. It's due for a bounce. So place your bets. That's all I can say. Place your bets.
Did they have any bad news or something? Just died, got shot. John F. Kennedy. It's just,
Contributor Jenny Harrington says we'll start selling Viacom series when I start getting back towards 100.
this looks
What
hurtful.
happened? I don't know what happened. There was a downgrade. There was some drama. I don't know what happened, but it happened.
This is hurtful, and it's not GameStop. Only GameStop could do something like this and then
I'm reading to the
recover it.
news. I don't know what happened, and there's a few other stocks that did it that Dwayne pointed out, but there it is.
This is bad.
Okay.
Next up.
Also, MU, Micron, super large float, technology, semiconductors as well, long term.
Boise, Idaho.
All right, this is long-term perspectives. This is U.S. actually making their own chips, and all of that stuff is, all of that type of make our own stuff is the push now. So they only can stand to go higher and get more government support. And MU is a definite target along with ON, Intel, and also AMD. Those are my sectors. All right, let's go to Africa real quick, and then I'm gonna wrap. JMIA. Oh, and don't forget GAP, GPS,
You want GPS first, or you want to go to Africa first?
both GPS or Africa, either one.
You go to GPS before we leave the country.
Okay, GPS, GAP, Kanye West, $1 billion boy. He crazy, but crazy makes you money. So everybody be crazy. Okay, you had convergence into moving averages, and you had a move. And right now, you're seeing that all of that expectation of gap to gain the retail space from Kanye West's energy has been catching it. We had a nice dip off that high. Look like it's just forming a flag to go long again. So off this, we're looking at 30 and a move higher. And it held up well for the last week. It held up well the previous days. And it's looking like it's ready to break out. Either it's going to break low or it's going to break high. I think it's going to break up high up to 32 and then go higher. That's just my gist. So it's summer. Don't keep in mind it's summer. This stock could be related seasonal. If we can get data on how this thing behaves seasonally, you probably might see some patterns, and there might be some money here. Here we have a data of June. You see a gap up in June. You see another gap up in September.
Back to school and summer shopping. That's what really happens.
Right. So now we have some data, and that data is coming back up. Now we got February and March giving us a gap. And
you know what they do, right? They have these slippers that they sell in Gap for like $1.99, some little cheap slides. But what it is, when people come in there to buy that slides, which they start selling it sometime in June, it fills the store. So people come in to buy the slides, but then now they get the shopping frenzy go on. And Gap usually have a lot of like really, cheap and clean stuff.
yeah,
Nothing crazy. And they have a crazy sale right into June. They sell those slippers and they go crazy with the sale. That's why they got this big chunk pretty much every June. And September, Gap, they sell like the school uniforms. Like the school uniform clothes, which is kind of hip. And then you get this September push here.
copy.
Over here, what happened with Gap now? Same concept. It bursted really hard, keep going. It exploded so far for the 20 that it had to fall back. Fell back between the 20 and the 50 right here in that buy zone right there. And then boom, you're gone again. So it's on that up, and it's going to keep going up. It's going to break 32, 33, maybe 35, and then chill out. Can go to 40 and then chill out.
Are we looking at a good option call or a good long for a couple of days or weeks?
Say it again?
We're looking at a good option call long for a couple of days.
Yeah, I would say if you can take an option call out for 3 weeks for 35.
Okay.
That's squeezing it tight. I'm being really tight, but for 35,
No, I like that.
All
right, Africa.
Zimbabwe. Oops.
JMIA.
JMIA, right?
Yes, Jumia.
I don't know what it's
Technologies, small float. 4,000 employees, computer services, technology. Some say this is the Amazon of Africa. That's
I
what this
see
is.
it. Huh?
Jumia, this is the Amazon of Africa.
I like it.
It's bringing Africans and entrepreneurs to the market space, to the digital market space, to selling their items, goods, and merch and services. And they're coming online. They've been doing well. And here you have it. Amazon of Africa. And the infrastructure of Africa has been growing. If they are one of the leaders, their space can only grow. That's the tech sell-off. They think it was overinflated. And there was an offering, I believe, conducted on Jumia, which made this price dip. But right now, we got that W shape for the win that Juice drew on. So there was a recent offering, I believe, to raise capital, which is good. And this is a long-term play for growth. So we're looking at a 10-year shot for Africa, when the Amazon start, and for it to become really like a thing. And
Amazon is about 40 years old now.
Yeah.
Not 40, sorry, 24 years old, sorry.
So we definitely looking at the same type of speculation that you might want to shoot out for this, for Africa to come online and in this space to grow. And it could be other competitors coming in the space, but right now Jumia is a strong competitor.
This right here is really the correction, you know.
Mhm.
The so-called crash, which was just a correction because everything was overinflated from 2021 started, everything just did this big jump up like it's going crazy. So all this is a correction. Come back down to reality. When everything came back down to reality, now it started a real journey, fell back a little bit, and then now it's on the rise again. I mean, this is a nice long term. I like it. I have it. I need to pick up some more shares right here because it's actually back into it was about to bounce off the 200, but right here it's still in a nice buy zone.
Yeah.
And I feel if you hold this for about a year, you should be able to get double your money.
Okay. Overall, I want to add that the market has been slowing down the last few weeks. It's been having crazy moves, but also as much as volume that usually come in the market, it's been slowing down. And it seemed like people are going into cash. A lot of people lost a lot of money doing a lot of those shakeouts from those penny stocks that was running crazy. So you want to be cautious. What was it? The meme stocks, the Reddit guys with the Wall Street bets definitely vacuumed a lot of money into the market. And I know a lot of people lost that money because they don't know how to interpret this stuff and they don't know how to read it and know when to buy, when to sell, and when to cover. Always have a plan when you get into a stock where I'm expecting to take profit. If it goes lower, where I'm expecting to cut the trade and cut my losses. Try to cut your losses as quick as possible. Keep them tight. And when you got something working and winning for you, try to give it some room to win a little more. Maybe take half, a quarter.
Your phone is the reason you can't sleep. That your laptop is
Really?
causing nagging headaches, blurred vision.
Really?
You was hearing that?
Yeah.
I'm sorry.
All right. So, yeah, just always have a plan for every single move that you make. Every ticker. I'm buying this and leaving it. No, you have to have a plan. If you could buy it and then it could be going bankrupt and that money is just going in the trash. You're basically throwing money in the trash. And, where you expect to profit and what would you do? Have a plan for everything that's supposed to happen. That's the best thing I could say that, make a plan, write it down. If a stock goes against me 20% or 30% or 10%, 5%, I'm gonna keep my stops tight. Or if it goes up, if it doubles, I'm gonna take it all off. If it doubles, I'm only gonna take half. If it goes up 25%, I'm gonna take it all off. I'm gonna take 50%. I'm gonna sell a quarter. If it goes up 25%, if it comes back down to my price, I'm gonna break even. I'm gonna stop out all the way because it might move lower. Let me read the news. Let me pay attention because there's a lot of volatility in the marketplace, a lot of fraud going on, a lot of companies being caught out there, and other competitors coming into the space. So we definitely got to work this a little more and pay more attention. And some of the stocks I noticed last week that were gapping back up, they wasn't holding their moves. It would gap up, but then it would say, all right, I'm coming back up, but then it would dump out again. It would lose its move. So even some of the long-term ones that we got, like BNGO, NNDM, they would come back up, act like they're coming back up, and then they would dump back out. They would lose their move. So right now they're not ready, and there's still a lot of volatility shakeout on the tech. So all that speculation, a lot of stuff was moving, but a lot of stocks are dumping out. Also, a lot of penny stocks, they've been coming out of $1, $5, $10, and they've been going up to $30, $40, $50, but they don't be holding a move. So guys, if you're in one of those stocks that come out of a penny and go up to 10, 20, like what was that? DLPN last week was one of them. It took off and it didn't hold its move. It went up to $30 and some change. It's back at $13, $12. And it came from under $5. Quarter like 80 million volume. The average volume is 1 mil to 3 mil. So it's not going to get you rich. Just get your shares. As it's going up, take your profit. You can't lose taking profit. And don't hold it forever. Think it's going to keep going. It's going to be hot. Because a lot of these things are not holding their move and they're shaking us out. It's better to just get your move, get a piece of it. And there's always some more coming up. It seems like that's what's going on too. That there's stocks going and they're making these crazy moves and they're giving it back on the day, but they be going for the majority of the day and then later on dump out, or they take a long time to trap a lot of shorts and then it coils up later on in the day, midday. Some of the stocks make their move. Any questions? Anything else? Anybody else got? I got a lot of stuff here, but we can't go through all that all night. What else is there?
No, I'm good. That's pretty much it. I mean, we can wrap it up and save it for tomorrow or another night.
Overall, the future markets is flat right now. I'm looking at those markets look dead actually. They're not open. Oh, they did open up. Okay, today's the 4th. Yeah. All right. So yeah, it's pretty quiet. The future markets look like it was a little dump out. It's not much volume coming in, so we might have a flat day tomorrow. The NAS and SP are flat right now. 23, 19% of gap back up off a sell-off off that previous day, which was Thursday, something like that. So, all right. Any questions? Anybody else? Anybody got any questions? You got that list, Motley Fool? I'll put the list in the chat. The article, rather, the link in the
Should
chat,
just
the
do
Zoom
it.
chat. You go to Zoom chat on your bottom screen and you can get that. And there's a lot of stuff to go. I mean, it's the ones we had from yesterday.
What about that? What about the GSX?
GSX. Did we mention that today?
No.
Whoa,
Ouch.
so much for that. What's your idea for that?
I think that was at $70 at one point recently.
Sure was.
Right, 2 weeks ago. It's right up here.
Does this run in tandem with WAFU and DLPN?
I don't think they run in tandem, roughly. It doesn't run in tandem, but let me see, GSX on. Oh, as far as education,
So they actually have a good bit of employees. CEO's been around like
Yeah.
7 years.
Beijing,
What's up with
China.
these guys? Yeah.
Okay, revenues increased. Yeah, I like the move it made in the new year, but it dumped out.
Can we get back to like $60? I'll take
The one
that.
buyback plan. I mean, until the chart shows me that, I wouldn't touch it.
Yeah, I'd leave it alone for a little bit.
I wouldn't touch it. The chart would need to show some type of indication that from that vacuum, from that gap fill, that it just gapped down below the average. And that's serious. So you need to find out why did it do that, see if anything, what's going on. And there's a downgrade on it or something like that.
It actually went down on more volume than it took it to go up.
So there's news out on it. There's a bunch of
There's a
news.
lot of volume here.
Try to find out why people are getting off of it, but it's a lot of news out on it.
78 mil. What's the floor on this? 78 mil. There's a lot of volume with it going down.
Yeah, it's a lot of volume going down. And that's
Yeah.
it broke all moving averages, and that says don't touch. Yeah, it could be a bounce coming, but they're talking about it, but maybe those people are trying to get out. Maybe they're hustling people to sell more into them. That's what I would suspect, because the float is pretty lofty and they need to get off a lot more shares. So they could be saying, yeah, we're going to go back up, and they straight lie to you and just dump on your head.
I mean, it's bouncing right here, but in that's still kind of.
That's not bouncing. That's,
I mean, it's hitting. I mean, sorry, it hit like a bottom here.
yeah, they can't find a buyer.
Is that a bottom?
Nobody to sell it to. If there's nobody picking it up, then well, you can't, it won't go nowhere. There's
They
nobody
won't
picking
go
it up.
nowhere. Like
That's what happened. There's no buyers.
they're looking for suckers. This is kind of sticky. From here, if you was in this from anywhere up here, over here, you're supposed to be looking for the exit. You're supposed to be at the exit door right here. At the worst case scenario, you're like, all right, you know what? This party's over. They shot it up. Everybody done left the room.
You got two bear flags.
Huh?
You got two bear flags over 140. You got the other one over 110.
Right.
And they're heavy. And that's it. So these are
This right here was the
China stocks.
But even if you got caught up with all of this, saying it had this and that, right here was the get the hell out of Dodge.
Yeah.
It's right here told you we going down. It came down. It kind of bounced a little bit, but it came down. It tried again, fell down again. And then right here is like, okay, we fall, and like, you know, you can't get up. So these two is your big warnings, like it's over. And then lights was on here. Because they took out your biggest candle here. All these over.
You got to read up on it more. You got to see if you want to make it a trade where it could make a bounce, but it would need to be heavy volume. And I don't know who's picking up 252 million size share flow size to make this thing price move more aggressively. It is a China stock. They're known for pumping and dumping their shit. So it could get sticky. They definitely shake out that. You see their price action is volatile. In a short amount of time, those are some serious price jumps. And this ain't American blue chip stuff. This is China Pump City. I don't know what's going on with it, but if you want to play that game, this thing would have to at least go to the base of 50. I would start looking at it, the base out on 50, and see if we can get a bounce there with good reason. Other than that, this looks like you can get your fingers chopped off either way. But I like it because of the volatility in the range. For a day trader, excellent stock. For an advanced day trader, I would touch it because it's giving up so much range. It's wonderful. Technically it had a bear pattern set up, which was excellent, and it committed aggressively. Whoever's down here now, if anything is going to bounce, it's going to be shorties covering, and they're going to make it bounce back up to the 50, and then it's going to be over. I could play that move if you see it claim the 40 on some GME type movement. It's got to be GME type movement though. If you don't get that frenzy cover movement, then I would be cautious. And then you got to time it. You have to be in front of this thing, watching it, looking for the trade. And then if you don't get that type of action and it continues to sell off, there's a problem. There's big boys getting off of big positions, and you don't want to catch those knives. Those knives, they take your head off. They don't just cut your hands, they take your head. Next.
That was it. He was going into Happy Easter. God bless. Good night. Tomorrow's another day. That's what he was doing, I think.
I guess so. We had a bunch of picks yesterday. That was awesome. But that list is I guess you can make that list, expand that screen completely so everybody can see it, maybe screenshot it.
Oh gosh.
Just expand it.
Huh?
Just expand it. That's all.
I think that's it. Nope, it's not it.
Let the recording get everything.
Oh, it's a pretty long list. Okay. We do up here.
Okay, SRRK is the bottom. Scroll down. Keep going. All righty, there you have it. Those are the things we were looking at yesterday. And they're pretty interesting, some of those tickers. If I were you, I would look into all of them. And any other questions?
No questions.
Any other questions? Any other questions? Going once. What's going on with the cryptos? Okay, we got Bitcoin claiming 57, Ethereum at 2,000, Litecoin at 201, Dashcoin heating up 2066, ZEC is at 186, XLM going down, Dogecoin 057, XRP 64, EOS $6.22. Bitcoin is a little bullish. XLM is a little dead. All right.
What platform you use to buy your crypto?
Huh?
What platform you use to buy your crypto?
I personally don't have any crypto. I don't trade any crypto, but I'm watching it now, and I'm considering getting some. I don't have a platform though. I wouldn't know what to tell you.